how would you recommend investors going into such a big event? Be light, stock specific, or play the index via options?
See, I think the market to an extent has already given its verdict in terms of what its expectations are for the budget. Like you said, situation is pretty sticky in terms of inflation. You have liquidity tightness, you have input costs increasing, you have interest rate scenario likely to go up. So I think the market has already factored in most of this stuff, and which is why it has actually peaked ahead of the event. We had the top of the market made sometime around early November. And it's been 4 months, it's almost going on to be 4 months now that we are into a sort of a decline, which makes it of an intermediate nature. Now the market clearly is not having too much of an expectation built in for the budget. In a way that is good, because you will not have those serious drafts on either side, since no large positions are built up. So I think if the market as a whole is traveling into the budget date on a rather light note, I don't see any reason that our viewers or investors in general should have anything other than a light sort of posture, and which will make them a little more nimble to try and jump in any direction which will be hinted at post the budget. So I think we should be nimble and we should be light on our feet.
A pocket that I believe you don't fancy too much, automobiles. The expectation is that there could be a reversal of the excise duty bonanza that was given the last time around, and it could be raised to maybe 12% again from the 10% existing. Fundamentally, we'll get Naresh's view as well, whether or not, I'm sure it's a negative, but technically on the charts, do these stocks look headed for further downside closer to the budget day, post the budget day?
I think we don't even have to wait for close to the budget day or something. They are headed down already, right? And if you look at the charts, it's unusual, but most of the auto stocks, Ashok Leyland, take Tata Motors, take Hero Honda, or you take Bajaj Auto, take any of these names, all of them have shown certain patterns which indicate kind of a topping out process. Now the market in its wisdom has sort of realized well ahead of the budget, and looking at whatever is the other setups which are there, that the input costs for autos are going to go up rather significantly, and that this is not something which is really going to pan out. We're going to have, let's say, the base effect, as we go ahead, and all these glorious sets of numbers that we have been seeing month after month may not really be the case in the months ahead either. So I think it's sort of put all this together, and this rumor or this particular talk about this excise duty thing being rolled back is also now adding its little bit to make the whole thing a little more everybody has been bullish on infrastructure on India, and they are very clear that that is also the space to be bullish on for the future also. This has actually led to a sort of over ownership in the stock, and all this ownership in the stock has been built up from very much higher prices than what all of them are ruling at right now. So I think this over ownership is actually acting as a hindrance to actually adding to your position, even when you see the stocks at about half the price from where they were actually quoting about 6 months back. Now they would really have to drop down to levels where they would look attractive from a fundamental aspect or a valuation angle. And for that, I think the few of the points that he made, that whoever is able to execute it well, bring all these plans to fruition, I think those are the stocks where there will be some inclination to add some more. And I don't see any of the stocks really having reached those points. You will have this, let's say, a stray new guy comes in and sees a Lanco at about, say, maybe $35 and sees that it's of value, and then it actually gets picked up and sort of rushes up to 42 or something. Those sort of things will keep happening. But as a sector as a whole, where you actually look at it and say that here are some mouth-watering valuations, no, I don't see that happening at all across the board.
Do you think, Dr. Narayan, that is needed in retail especially, because charts show the last 4 years these stocks haven't done anything. Every budget they hope for some bit of reform and it doesn't come around. You think that is what is needed for the space?
Absolutely, I would agree with you 100% that is exactly what is needed for the sector. And it does seem that all these set of stocks that you mentioned are actually lying in wait for any of the FMs to try and do the trick. So we hope that it'll be their turn this time. And if it does happen, there's a nice build-up, you know, there's a nice long base which has been created. So if it does happen, then you will have some really nice upsides in all these stocks. So it's something to look forward to, because then these stocks are not so much owns, you know, in terms of, let's say, wideness of ownership. And I think that will act as a major positive and send these up into nice strong uptrends if it were to be backed by some event at the budget.
For the market though, does it seem like it's building anything? Because the prediction really is it's going to be in a limbo for next 6 months.
It does look that way, because if you look at all the power sectors, you know, the main ones, they're all not really giving you any signs that they're going to participate very widely in the coming year. So it's going to be all these outlying sectors like fertilizers and, you know, sugar, or you have a stray retail and here and there, which don't really contribute far too much to the index. So if you don't have your major ones really participating, your oil and gas, your steel and your power and PSU, etc., your index is not really going to go anywhere. And that's not very, very surprising, because you have had about, 4 years of major trends, up and down, whichever way, but then they've all been hugely trended markets. So, and this is across asset classes. It's not just sort of restricted to equities. So when you have those huge trended markets for about 3-4 years running, maybe it's time for the market to consolidate a bit. So maybe 2011, 2012, index-wise we might consolidate, but we might go actually in search of newer areas, virgin ones which have not really been maybe discovered yet in terms of true potential.
Your top contra bets or bets at all over the next 3
May
years?
not be exactly a contra bet, but I think one of the stocks which is used to be on everybody's radar, but is actually getting dropped right now, Suzlon. I think that stock is trying to put in a long-term bottom. You know, it's not really shedding too much ground. There are all sorts of bad news all over the place, and you know, people have actually abandoned the stock. But then it's sort of building a base right now, and I think that will lead up to somewhat of better times. It's going to take its time, which is why I'm actually including it in your list of a contra bet. As otherwise, I think the whole year is going to remain a short to medium term kind of story, where you should be more, let's say, trading oriented. I mean, trading may be a little too forceful a word, but then I think it's not going to be a long play in the sense of buy and hold. You will have to cash out every now and then and move on to other things which will keep changing. So it's going to be an active year, like Naresh said, wait for the trade to come to you. Don't really chase it down.